there is clearly an inflation risk, and we know that these tariffs are going to bring inflation. Of course, that what they bring is a one-time jump up in prices. And so the Fed has to ask, can we look through this period of inflation? Can we say transitory again, ignore it, and then focus on the growth? Because there's clearly going to be a big hit to growth. The challenge I think that the Fed has is that it's just not 100% sure what it should be doing. Does it want to try to stimulate demand in this environment? Does it want to slow demand down? If I was there, I'd be more worried about the risk to growth because unemployment has long and permanent effects. So I would really be focused on that. But equally, I think what they're going to have to be looking at is not what do people expect for inflation this year. We all know inflation is going to be higher this year. But what do we expect is going to happen to inflation in 3, 4, 5 years? And we have very fragilely anchored inflation expectations right now. If they see that fragility getting even worse, I think they're going to have to turn to making sure that they keep those anchors in.
We heard from Kevin Hassett over the weekend. He did Sunday morning television, Betsy, and suggested that the phone is ringing off the hook at the White House. And if you listen to what he said, you might envision a world where there are no tariffs in the near term. Let's listen.
So the fact is the countries are angry and retaliating. And, by the way, coming to the table, I got a report from the USTR last night that more than 50 countries have reached out to the president to begin a negotiation. But they're doing that because they understand that they bear a lot of the tariff. And so I don't think that you're going to see a big effect on the consumer in the U.S. because I do think that the reason why we have a persistent long-run trade deficit is these people have very inelastic supply.
What's your thought on that? We know that the president spoke with Japan earlier today. He's meeting with Benjamin Netanyahu now. We get to the end of the week. Let's say these 50 leaders cut deals with the president. Does he look like a genius? Markets up 1,000 points?
No. So let's start with the simple thing. Look, I don't even think Kevin Hassett believes what he was saying. Why are countries coming to the table? Not because they think they're going to absorb the price increase, but because when prices go up all around the globe, we all sell less. The stock market is not falling because they're worried about having to pass through prices onto consumers. It's that when you pass on high prices, if the price of Nikes goes up 30%, you know what people are going to do? Buy fewer Nikes. And so even if they're passing all those prices on to consumers, it's not good for Nike profits because people don't buy their product. And that's what countries all around the globe are worried about. It's about the shrinking of trade, not about who's paying the prices. The American consumer pays the prices, and the administration even believes that they pay the price because they're talking about the great, gain in revenue they're going to get from these tariffs. So they know that the tariffs get paid here, that it's not going to show up in terms of hurting some other country. So then you said, well, wait, could Trump be the genius who eliminates tariffs? Tariffs were incredibly low before Trump started all of this. I think the reason he has shocked markets so much is because everybody thought, oh yeah, maybe we're going to get 3, 4, 5, 6% tariffs. That's going to be a huge increase compared to the past, but not these numbers that are like, early 20th century tariffs. Nobody expected them because they are enormous. No other country has them. Calling them reciprocal tariffs is completely misleading. Vietnam is not charging us 46% tariff, which is what we put on them. They're charging us like a 1.5% tariff. So is he a genius if that 1.5% tariff goes away at the cost of all the turmoil he's caused around the globe? I don't think so.
Well, one of the things he argues is that this brings back more manufacturing to the U.S. My question, Betsy, is when you consider that there's tariffs on actual raw materials like steel and aluminum, potentially lumber coming down, what impact that would have on actually the ability to build out that infrastructure, let alone to find the labor force to build those factories or populate them ultimately when construction is done, given some of the other efforts around migration specifically in this country. How easily can it realistically be achieved if some of those barriers are put into place?
Everything you said is exactly right. And then let's add on top of that, that it takes several years to build a factory and get it up and running. We're not talking about building factories in the United States where we assemble Nikes. We're talking about paying more for Nikes. Even if he's talking about protecting American manufacturing, he is hammering the American auto industry with this. They are suffering more because of all of the tariffs on the components of cars. Look, we cannot have a car or even a bicycle without imports because we don't have rubber in the United States. So what are we supposed to do to actually move that car down the road if we don't have wheels? It's just not, it doesn't make any sense. If you want to support American manufacturing, you don't do it by making all the ingredients in American manufacturing more expensive.